Still playing the markets, or are you already feeling the fear? Global stock markets continue their seemingly unstoppable rise. Tech giants like Nvidia, Microsoft, and Apple are driving the rally with billions pouring into artificial intelligence. AI is hailed as the next big thing, and investors are chasing record-breaking returns. But behind the shine, concerns are growing. Are we heading toward another dotcom-style bubble? The real economy is lagging. Trump's tariff policies are stirring tensions, and Europe is falling behind both US and China. Meanwhile, Germany faces the threat of a third consecutive year of recession. So today on To The Point, we ask, stock market hype, investor's dream or nightmare on Wall Street? Hello and welcome to The Point. I'm Isha Bhatia-Sanan here in Berlin, and these are my distinguished guests. Claus Soong, he is analyst at German think tank Merics, that is Mercator Institute for China Studies. Next, we have Christian W. Röhl. He is financial market expert with around 30 years of experience and chief economist at investment platform Scalable Capital. And from DW Business, we have Kate Ferguson. Thank you so much for joining. Kate, what's going on? Now, for the last 6 months, the graphs have been going up, but now there are speculations. I mean, the speculations have been going on for quite some time. But what is the basis? Let's start with just the basics. What's really going on?
Okay, well, I think fundamentally two things can be true at once. So for the first thing, AI is the defining technology of our time. It has the potential to transform healthcare, finance, warfare even. The problem is we don't know how exactly. And that big chasm between theory and application is the reason that we're talking about a bubble. Because at the moment, AI is just not making money. So we're seeing this huge difference between how much is being invested and how much is actually being earned. So ChatGPT, for example, is still making a loss out of nearly every query that we make. There was a study by MIT recently that found that 95% of workplaces that had actually implemented generative AI weren't making any money from it at all. So that's the problem. There's this massive difference between how we feel about AI and what is actually happening concretely.
Right. Klaus, to think logically, geopolitically, it has not been a great time. There's war in Ukraine, Trump's tariffs, China's been acting tough on raw materials, and yet the market is going up. How does one explain that?
I think, yes, we are seeing there's a tough time in geopolitics and more turbulent, but also we are seeing economy still growing in some part of the world. And the AI booming is actually contributing that. If you're looking on the stock market, when we're seeing on which stock is going up, tech stock is the major forces to push up the index. But the real economy, maybe there's a question, right? How much it really grow and contribute to the stock market. So, of course, despite the turbulence in geopolitics, but economic-wise, yes, it's still going. But how does it correlate it? I think doesn't reflect that much about the tension in the stock price.
And one reason why everybody is investing so much is because things have become easy with apps, with Neobrokers, with companies like yours. How much do Neobrokers and companies like yours, like Scalable Capital, are responsible for this kind of a boom where youngsters are very much into investing into the market?
We are not responsible for the boom. We are responsible and proud that we can give people access to markets at a very, very low cost level. And it is, of course, digital investment platforms. And on the other hand, it is products like ETFs, exchange-traded funds that make it possible to invest into an index like the S&P 500 or globally the MSCI All-Country World at maybe 0.1% per year. You have 2,000 stocks at your fingertips with only one click, and it's a great way to participate in this industrial revolution that we seeing now, and moreover, in general, in the creation of wealth. And over long decades, the stock market has always been a wealth machine.
So what is a typical user on your platform like? Could you give us a brief profile?
We have customers starting with a very first savings plan in the app, maybe even students with 10 euro, and it's great, and we're proud that they address the Scalable Capital to host their money, because that's the start for building wealth, up to people that have larger fortunes and either decide on it themselves or have our experts letting manage and rebalance their allocation. I don't like the wording typical customer, because every customer is individual, but if you want to have an average, it's about 30 years old. It's a growing number of females, which we are very proud of, which is a very important point to us, female empowerment. And of course, ETFs, easy access to global diversified markets is the main focus, but of course people can also trade stocks over 8,000, precious metals, crypto, and collect interest.
So a lot of youngsters, I ask this because Gen Z and millennials are showing a lot of trust in Bitcoins and AI, and you can't blame them, because as of now, it almost feels as if the stock market is living a life of its own, completely detached from political and economic realities.
From Nikkei to NASDAQ. Since the beginning of the year, the most important stock indexes have risen up to a fifth in value. Why? All the hype surrounding artificial intelligence. Shares in large US tech companies in particular are skyrocketing, fueled by hopes that AI will revolutionize the world. Nvidia, the leading chip manufacturer for the AI boom, is the first company in the world to reach a market value of $5 trillion, making it more valuable than Apple and Microsoft. Mark Zuckerberg's Meta is also reporting record revenues. However, profits for the parent company of Facebook and Instagram recently plummeted by 83%, and its stock price temporarily crashed. One reason? High investments in AI. Investors are increasingly wondering whether the billions are really worth it. Experts are already cautious about a bubble like the one at the turn of the millennium, when the internet took the markets by storm. And once again, prices are rising faster than the real economy can keep up. Fears of a stock market crash are growing. The great stock market frenzy. Is this still growth or madness?
Growth or madness, Kate? How do you see it?
I wish I could say definitively it was one or the other, but I think there were a couple of interesting points that were mentioned in that report. I agree with Christian that the democratization of investing is a really good thing. And if you are a young person in particular who's facing a precarious job market, you're not sure if you're ever going to be able to afford a home, it gives you a sense of agency to be able to say, well, I have an app and I can invest what I do have, whatever disposable income I do have, and see how it goes. Of course, though, there's a massive distortion between reality, what these big companies are doing and how they're performing, and the economic situation. That is precisely why we're seeing so much investment, I think, from young people in these apps. If we look at Nvidia, even $5 trillion, that's more than Germany's entire economic output for a year. It's no wonder that so many people want to get in on the game.
But $5 trillion, some analysts are calling it a scam because of the circular kind of movement of money that's going on. How do you see that?
Yeah, the circular movement is something that scares me a bit, because if Nvidia starts to pay one of its largest customers, like OpenAI, with an investment of $100 billion, so that OpenAI will still be able, despite the losses, to buy more chips. Yeah, it sounds like you're buying your own revenue of the future. This is something that scares me after I have been in the market at the dot-com boom too, and we had those cross deals too, and it didn't turn out well. But there is, of course, another interpretation that you see that Nvidia, OpenAI, and some other big tech companies are building kind of a revolutionary ecosystem for AI, because it is such a big challenge, especially for getting the money in there, because it will cost trillions to finance. So, and the truth will be in the middle. And the stock market, long time, always saw the big potential. Now is discussing about the risk. But we have to face it. There has never been really a test of the artificial intelligence narrative since ChatGPT went public 3 years ago. We had some drawdowns, but they were not caused by anything related to AI. It was Trump's Liberation Day, it was interest, it was Japan's currency. Maybe we sooner or later see some test of the narrative.
But OpenAI has not been making any profits. How long do you think it'll take for OpenAI to reach that position where it also starts?
They said they will be profitable in 2029, and to me it doesn't matter if it's 29 or if it's 30 or 31. The question is, will they be one of the dominant forces in the artificial intelligence race? And at the moment, they seem to have the power. We will see which other companies will join. But of course, it is very important in the short term to say they are not profitable and they're dangerous. But we should draw a line to other successful companies and other investment booms. The first railways back at the start of the industrialization haven't been profitable at first too. And of course, the first internet companies haven't been profitable either. And we saw lots of companies disappearing 25 years ago. The hotspots were AOL and Yahoo. They are still existent somewhere under the radar. And of course, some companies will disappear. But there's also been an Amazon. They were selling books back that time, and now they are one of the dominating forces. And this is why young people make so many things right when they say we want to invest broadly, and of course some bet on unprofitable companies like Oklo or Fermi. Fine, that's a part of the deal. But many people just invest broad with a savings plan and cost average. That doesn't mean that we can't see a crash. Of course we can. But this long-term perspective, especially for young people to see the stock market as a participating element, participating in wealth creation, is much more important than this short-term view.
So how bad is this crash going to be? And this question's to all of you. Some are saying it's going to be one in a century, like the one in 1929. Some are saying it's like the 2000, the way we saw in dot-com. How bad could it be?
I think it's funny that we're always making the link between crash on the one hand and artificial intelligence on the other hand. I think there are other threats in the market we could talk about, like the private credit bubble. A lot of credit that has been paid out, not by banks, but by non-depository final institutions, where you don't have the granularity to see where has the money gone. We have seen some cases like First Brands or Tricolor. Now they have been in the middle of intransparency and fraud, and maybe there is more. Or we look at sovereign debt in the USA, in Japan, in France now. This could also be a bubble. So we're surrounded by threats, but we have always been surrounded by risk factors. We have seen crashes over the years. We have seen some disasters, but in the long run, the stock market has been a wealth creator.
So there would be a crash. We don't know how bad. We just have to be prepared.
We need to define crash. What is crash? Back in 1987, the crash at Wall Street was a horrible disaster. But if you see it now on a long-term chart, you see after 2 years, it's been over and it's been a great chance. But of course, for your mindset, it's a big challenge to stay in the market then and not to leave exactly at the point when everyone's saying, oh, wow, the world is going down. Or remember Liberation Day. There was a minus of 20% in the S&P 500 during days. And you needed to be in the market and not going out on the 8th of April.
So right now, the rally is being driven by the Magnificent Seven. Now, there are a lot of Chinese companies too. Why are investors not really putting in as much money in the Chinese companies as in the Magnificent Seven that we're seeing?
I think we do see some some investment flowing into the Chinese company. But these Chinese companies are not that, I don't think they're that internationally opposed to the investor. And these companies are, to somehow they are still mainly focused within the Chinese market. And the Chinese market, Chinese economy is not doing that well, right? So I think that investment is, in my opinion, is somehow is a kind of projection about future profitability. If the market doesn't go well in the current stage, why would we put money in? To put into even a big company. Why, right?
But people are putting in money, right? Yeah,
they're still putting money. But I think compared to the giant seven in the U.S. market, they're much smaller in a share. And the sentiment is very bad in the Chinese stock market, I think, in the current stage. And this is also about the confidence about how the economy will doing in the future. And it seems to be a question mark about how we are seeing Chinese economy will going to, no matter it's rebounds or recover, or maybe in a simple term, back to the track.
So the trend that we see is that as long as there is the AI tag, people are willing to invest. Now, AI, of course, we're seeing this new kind of an industrial revolution because of AI, and investors are putting in money. But at the same time, AI is also going to take away jobs. Now, look at Amazon, for instance. So are investors financing their own demise, their own doom?
Well, maybe, because I think technology has generally proven to be more effective at investing than any individual. But to be maybe a little less facetious, I think what's really key is to find a niche, because at the moment we've just got all of this money flowing around and we don't know where exactly it's going. And I think companies would be best advised to find, well, where can we apply this? And I think if I look at Europe, for example, we talk so much about Europe being behind in the AI race. It's not going to catch up on private capital. It's not going to catch up on innovation. But where I think it could do well is to actually find those kind of unglamorous, boring niches, the way German companies, for example, the classic Mittelstand, the small and medium enterprises, have always been able to do. You know, traditionally, they've been really good at developing specialized screws and mechanical tools. The same principle needs to be applied to AI. People need to find uses for it, and you don't necessarily need the most money for that. You need the most focus.
I'd like to come back to Europe in a bit, but at the moment, the thing is that the stock market boom has been great for investors worldwide, but especially for the US and President Trump. It has boosted government revenue and added about $3 billion to Trump's own wealth. A rosy picture, but one shadowed by China.
An impulsive dealmaker meets a cool calculator. Agreements between Trump and Xi have global consequences. The world's two most powerful rivals are flexing their trade muscles through tariffs and export bans. In their hands, key technologies for the future. The US leads in AI. China in e-mobility and raw materials. They have resolved their trade conflict, for now. Xi is suspending export bans on rare earth metals for 1 year, and Trump is easing tariffs. The stock markets continue to celebrate. But Europe is turning into more of a spectator. German Foreign Minister Vadapul canceled his visit to China at short notice because hardly any meetings were confirmed. The Nexperia case also shows how dependent Europe is. Following a court ruling, the Dutch government seized control of the Chinese-run chip manufacturer. Beijing then stopped supplying finished chips, which threatens German car manufacturers. Trump and Xi are calling the shots. Are the Europeans just bystanders?
You were talking about Europe. Now, China's been very strategic about making other countries dependent on China. US had recognized that long ago. Where is Europe in this whole picture?
Yeah, I think fundamentally this narrative about the AI race being between China and the United States, it's very compelling, but I often don't quite know what we mean. I mean, are we talking about which country is going to have more AI prowess in military terms? Are we talking about which country will make more money? Which country will have more innovation? So I think at the end of the day, it's unclear when this race will be over and how we will determine. The reality is that AI supply chains are deeply internationally entwined. So chips tend to be designed in the United States. They are manufactured in Taiwan. The raw materials come from China. And it's really impossible at this point to detach ourselves from that. And that was reflected in Xi and Trump's meeting, where there was a concession made in tariffs in exchange for these rare earth commitments. So I think fundamentally, this race narrative, I'm not sure how helpful it is, to be honest. When it comes to Europe's position, yeah, as I mentioned, I think inevitably they are behind. There's no denying that. And I think it's a little bit naive to, talk about, Europe having the aim of technological independence. That's not going to happen. But it does need to be smart and strategic because it doesn't have the infrastructure. It doesn't have the private capital. It doesn't have the history and the structure. Of course, much can be done to improve that, but that's not going to happen overnight. The EU, it's just not.
But I mean, hasn't it become easier now with Trump's tariffs and everything that Trump's been doing? A lot of IT people from India, for instance, or rest of Asia, who would go to US, now it's not that easy. I wouldn't say they're not allowed, but it's not as easy to go to US the way it was. And then the second stop would be Europe. It would be Germany, for instance. Hasn't it become easier for Europe to deal with this problem, at least, that IT people would be coming in here?
I'm not sure if necessarily Europe will win against the United States in terms of attracting talent. I would hope so. I think a lot of professionals are, kind of a little bit put off by the bureaucracy, the visa requirements. Yes, lots can be done to improve that, and we talk about that all the time. But concretely, I think a lot of people are not necessarily choosing to come to Europe, and we do need to change that, absolutely. But I just don't see it happening that quickly, to be honest.
You've been wanting to pitch in.
Yeah, of course, bureaucracy is one, real estate is another point, yeah. Imagine you're a startup, you're in Berlin, you're attracting talent from India, and those are experts. They need to have a space to live, a nice flat. It's an issue here in Berlin. So we have practical problems that aren't solved, and if we really want to make this serious and attract talent, we have to get over bureaucracy. We have to get over regulation. We have to talk about tax benefits. We have to make ourselves really attractive, and this is also a question of mindset to welcome people from all over the world. We have seen this in Berlin, especially as a spirit, but we need some more political effort put in this. And of course, some political tendencies in this country are not helpful when it comes to the point of attracting talent from foreign countries.
Yeah, so we could have another show on how startups need a lot of support from the government, because I know a lot of people are actually leaving Germany now because of the bureaucracy and the red tapeism.
And it's not only startups. We have a great industrial basis in Europe and especially in Germany. Just remember the chips that Nvidia designs that are produced by Taiwan Semiconductor Manufacturing would be impossible if there wasn't an ASML of the Netherlands and Carl Zeiss and Trumpf from Germany that are creating the basic technologies for the machines. So we could be a bit more self-confident. And of course, we have great bases in electrification and smart grids, also in applications around artificial intelligence. SAP is showing this. Siemens, our old industrial giant that has really evolved itself into a great company. But all those companies need more environment that helps them to keep the business in Germany, or they will make the business somewhere else. And they are still German-based, but we won't benefit from it.
And how would China see that strategically?
I think China see is in relation with Europe in a competition as well, for sure, but also a possibility for cooperation. However, I think Europe is not on the top ranking about China's foreign policy agenda. Obviously, for reasons like overcapacity, for China's alignment with Russia in Ukraine. So that is the two major obstacles we are seeing between Europe and China for their relation to proceed further. And for the Beijing decision maker, their focus is actually on US, right? For the competition with US, the US-China competition actually leave like Beijing's expectation to Europe is it does not go further deteriorated, and that's good. right? They have to be like both sides don't have incentive to give in. Beijing is not giving up its industrial capacity to accommodate the European need, right? But European need, the industrial basis is so important because that is the foundation about how we see no matter it's the soft power or the hard power for Europe. So I think in that sense we see is competition more, but no one want to give in.
That's all the time we have. 10 seconds. What would be your advice to youngsters who are still investing?
Invest globally on a monthly basis with a saving plan. MSCI All Country World is the starting point, and then see where you go from there.
So you don't have to be scared. If you're also into stocks and market, do let us know how you're preparing for the next big market crash. Leave a comment below, and thanks for watching. Goodbye.